Canada's housing market is resetting in 2026. Well, that's a narrative I've seen across a lot of Canadian real estate social media, and at the same time, there are reports calling for stagnation and others suggesting modest growth. So which is it? Are we heading for a boom, a bust, or something in between? Canada is a big place. All of those outcomes can exist at the same time, just in different regions, and national headlines are almost always driven by what's happening in Toronto and Vancouver. But if you're in Calgary, the only data that really matters is what's happening in Calgary. I don't have a crystal ball or a time machine, but I do have data. And before we get into that data, this is not a calling the peak or calling the crash, and it's not a narrow snapshot of today's market. In this video, I'm going to use the data to outline where Calgary's housing market is most likely headed in 2026, and what that means if you're buying or selling. At its core, housing markets are driven by two levers: supply and demand. High demand and low supply creates a seller's market. Low demand and high supply creates a buyer's market. And when those forces are closer to a balance, we get exactly that, a balanced market, which is where Calgary finished in 2025. One of the biggest drivers of housing demand is population growth. More people equals more buyers, and since 2023, Alberta has been one of the leaders in this department. There are two primary sources of population growth here in Alberta: interprovincial migration and international immigration. Since late 2024, Alberta has consistently led the country in net interprovincial migration, and by Q3 2025, it stood out as one of the only provinces still reporting population growth. That's a meaningful point in favor of Calgary relative to the rest of the country. Interprovincial migration tends to translate into home ownership relatively quickly. People moving from other provinces are often looking for a better chance at ownership, and Calgary remains one of the few major cities where that's still realistic. International immigration works on a longer timeline. Most newcomers take time to settle before buying, often 1 to 3 years, which makes a lot of sense. From 2021 through mid-2025, Alberta consistently recorded very strong levels of international migration, often exceeding 10,000 net newcomers per quarter, among the highest in the country. While net international gains slowed in parts of 2025 due to changes in non-permanent resident flows, that earlier surge still creates a pipeline of potential buyers heading into 2026 and beyond. Of course, population growth only matters if people are working. Canada's long-term unemployment rate generally sits in the mid-6 to low 7% range. In late 2025, Alberta was close to that level overall. More importantly, in the core home buying age group, ages 25 to 54, unemployment sat near 5%, down meaningfully from the year before and well within historical norms. In simple terms, people moving here are finding work, but the labor market isn't overheating. It's very much in line with long-term trends. Now, wages matter too. Through 2025, average weekly earnings in Alberta were in the mid-$1,300 range, up a few percent year over year and still higher than both British Columbia and Ontario. At the same time, Calgary's benchmark home price declined modestly year over year. When you zoom out and compare Calgary to Toronto or Vancouver, the affordability gap is still pretty striking. Calgarians earn more on average and pay less, significantly less, for housing. That relative to affordability remains one of Calgary's strongest demand supports heading into 2026. So based on demand alone, you could argue that 2026 is going to be banana land crazy. But demand is only really half of the equation. Now, when I look at supply going into 2026, I'm less focused on today's inventory count and more focused on what actually determines how much more supply can realistically come to the market. The first factor is seller flexibility. Most homeowners aren't forced to sell. Strong equity positions built up over the past housing cycle, manageable mortgage structures, and high replacement costs give sellers patience. Many will test pricing, wait, or pull listings rather than sell at a discount. The second factor is price friction. After several years of strong price growth, sellers tend to anchor to prior highs. When the market no longer supports those prices, homes don't always immediately reprice. They sit. That creates the appearance of a rising supply without a true flood of new listings. The third factor is new construction. While recent years saw elevated housing starts, builders typically manage supply actively. They phase releases, slow starts, and use incentives rather than dumping inventory. New construction adds competition, but it rarely results in sudden oversupply. That said, in certain areas like parts of Cochrane and North Calgary, Northeast Calgary, we have seen localized oversupply, which highlights how region dependent this can be. Now, replacement cost is another important constraint. For many homeowners, selling means buying back into a market where land, construction, and development costs are all higher. If replacing your home costs more than staying put, there's little incentive to sell unless you truly need to. And importantly, supply pressure isn't evenly distributed. Any buildup in listings tends to concentrate in specific price ranges or property types rather than across the entire market, something we've clearly seen in Calgary's condo and row townhome segments. Taken together, these forces point toward moderate inventory, not oversupply. Enough competition to keep sellers honest, but not enough to break the market. 2025 marked a clear transition. Inventory rose, sales cooled from unusually strong levels, and the market moved towards balance. That shift wasn't uniform. Higher density segments softened, while detached and semi-detached homes held up better. For the first time in several years, we're entering a new year with healthier inventory and fewer extremes. But still, what about interest rates? Yes, interest rates matter, but they don't operate in isolation. We're no longer in a rapid tightening cycle, which reduces uncertainty. At the same time, lending standards remain conservative and small rate cuts tend to improve sentiment more than actual purchasing power. There's also a behavioral lag. Buyers don't rush back the moment rates move. In Calgary, rate changes tend to affect who is active more than how many buyers exist. That means moderate rate movement is more likely to support stability than trigger another surge. Now, there are a few variables that could materially shift this 2026 outlook. Sustained weakness in energy prices could impact employment and confidence. Policy changes around immigration or lending rules could affect buyer qualification. A sharper slowdown in construction could tighten future supply, and broader economic shocks could weaken demand more quickly than supply can adjust. We caught a glimpse of this kind of sensitivity in 2025. Heightened uncertainty around the federal election and concerns about potential US tariffs created hesitation in parts of the market, reminding us how quickly sentiment can shift even without dramatic changes in the fundamentals of supply and demand. Putting it all together, the most likely outcome for 2026 is neither boom nor bust, but a continued balanced and segmented market. Prices are likely to be flat to modestly positive overall, with variation by segment. Inventory should remain higher than the extreme lows of the last cycle, but not high enough to create oversupply. Competition will be selective. Well-priced, well-located homes will sell, while overpriced or compromised properties will sit. Detached and semi-detached homes are likely to outperform, while apartments and some row townhome segments may continue the lag where supply remains elevated. This is a market that rewards realism. For buyers, preparation and education matter more than timing. Calgary isn't one single market, it's a collection of micro markets. In some areas, homes are still overpriced, while in others, pricing is far more in line with market realities. Buyers who understand neighborhood level trends are better positioned to act confidently without overpaying or missing out on a home that truly fits their needs. For sellers, strategy beats hope. In more competitive segments, the homes that sell are usually the best priced, the best presented, or ideally both. This is no longer a list it and it will sell market. To protect as much equity as possible, sellers need a clear pricing strategy and exposure across the right marketing channels. And for everyone, waiting for perfect conditions is often unrealistic. Life doesn't always line up neatly with real estate cycles, and that's okay. If prices soften, it typically affects surrounding homes as well, just as rising markets lift the broader area. In Calgary, successful outcomes are usually manufactured through education and a strategy tailored to your situation, not by trying to beat the market. Calgary doesn't move in tandem with the rest of Canada. The people who do best here aren't reacting to national narratives, they're watching local data. Migration, employment, inventory by segment, construction activity, and neighborhood level trends. When you focus on those signals, the picture becomes clear. 2026 looks less like a reset and more like a recalibration, where strategy matters more than speculation. And in markets like that, local data always beats national headlines. If you found this video helpful, please consider liking and subscribing. And if you'd like to talk more about what working with me looks like as you navigate the Calgary real estate market, my contact information is in the description below. Thanks for watching, and I'll see you in the next video.